So welcome back everybody. Let's talk a little bit about now the loan approval process, which is actually the most important part of your job when you're working in sales or credit risk in banking. And let's see now our whole timeline. First, it starts with the indicative memorandum section or part. In this case, we are talking about the beginning phase of the deal. And the goal of it is to actually give an offer to the client which is not binding. This means that you send, for example, an email or a letter to a client that, for example, the pricing of your deal is going to be, let's say, 5%. But I have to also mention it again that it's not a binding offer. And when the client says, yes, okay, I accept it, then the credit application part starts, which is the second part. In this case, the sales creates a proposal regarding the deal, and its goal is to reveal the most important business parts of your credit or loan contract. In this case, you are creating a presentation wherein the decision makers of the bank are actually, how to say, informed about the key aspects of the deal. Afterwards, the financial analysis part, which is conducted by risks. And in this section, actually, the credit risk analyst has to do something. You're not involved into it. However, you have to be able to understand it. And if the financial analyst says something bad about your deal, you have to be able to defend your client. In the upcoming part, or in the fourth section, it's about the decision making about the deal. Mostly the sales and the credit risks are involved into it, and obviously the decision makers of the bank. If it's a yes, then the contract signing and the contract negotiations start. Here, obviously, if both the lender and both the borrower already said yes, then big changes regarding the client contract or credit contract are not expected. However, minor things can change. In the last section, the disbursement part comes. Actually, it's just technical things. The disbursements mean that the credit amount is available to the client, and the client is enabled to draw certain amounts of money from the capital that is lent towards him. And now let's talk a little bit about now the timing. Here you can see that the indicative memorandum is kind of a shorter period. It takes up 1 day maximum, but indicative memorandums can be written in 20 minutes. The credit application can take up 1 week if it's very long, but in most cases it's a little bit shorter. The financial analytics can also take up 1 week, and the decision about the deal itself, if it's a yes or a no, can take up 1 day. And also the contract signings and signing and negotiations can also actually take up 1 week. However, it can also be longer, because if there is something that the client is saying that is not willing to sign, then it can take up a really long period. And as I have said it, in the next section, I'm going to talk about the indicative memorandum, which is the beginning phase of the loan approval process.